Hey, it's Al Esposito here, Guarantee Rate Affinity, your mortgage partner. And today I wanted to discuss the pros and cons of FHA versus conventional. It's a big topic with so many first-time home buyers getting into the market and people looking at multifamily living, and there's definitely some great benefits to both. First, I'm going to start out with FHA pros and cons. FHA, if you're buying a multifamily, will allow you to put less money down as a first-time home buyer or a second-time home buyer as long as you don't have another FHA loan. FHA will also allow you to get a better rate because they don't look at your credit as much as a conventional loan does. They also allow for higher debt to income ratio. What that means is that it'll allow you to qualify for more of a loan because they're not as limited as a conventional loan. Some of the cons are you pay PMI for the life of the loan, or you have to refinance if you don't put 10% down. That's a big one. You also pay an upfront mortgage insurance to FHA to use their product. Now, this is standard in the industry. It's not cheaper at one lender versus another. It's a little easier to qualify, as I mentioned, too, because they allow you to put less money down on multifamily. If you're looking at a single family, it's 3.5% down. They also allow for credit events such as bankruptcies and foreclosures, where conventional want a much longer period of time. FHA is more open to that. On a conventional loan, a lot of benefits as well. You could put 3% down. There's first-time homebuyer programs that allow you to go up to 120% of the AMI, which is income. We as a lender can pull that and let you know if you qualify. And even if you had lower credit scores, you could still get a very competitive rate as a first-time homebuyer with lower credit. If you were looking to buy a condo under that loan program, they waive the add-on for condo, which is huge because that add-on is pretty big. You don't pay upfront PMI. You also will be able to drop the PMI once you meet 20% equity position in the property. They'll have higher loan limits on conventional, and the guidelines are a little tighter because we have to stay within a 50% debt to income ratio, depending on AUS, which stands for automated underwriting. When we take a loan, any lender, we collect all your data and we run it through an automated underwriting system. And it tells us yes or no. And as a loan officer, it's my job to make sure I've done that correctly. Either way you go, FHA is a great road for you if it is what is best for you based on your financial and credit worthiness. Conventional is equally great. Let's put a plan together. If you have any questions, let me know. I can always be reached at 908-531-8134, and I want to thank you for your time.